Good morning, ladies and gentlemen. How are you all doing? Hope you all have a great day. Welcome once again to Ask Abhishek Raj Show Morning Dose here. I'll prepare you for today's trading sessions and where are the opportunities, how to approach the markets, and how to save your money plus make some money as well in case there is any opportunity. So let me quickly take you through the data points, what all you should be looking at, and how you should actually approach the markets. So starting with the fund flows. Again, fund flows doesn't give you much of the cues. Yesterday, foreign institutions sold about 1,000 crores of cash, rather 1,055 crores, and they purchased index futures worth 200 crores, plus they purchased in stock futures worth 440 crores. So it's like they purchased above 600 crores and they sold about 1,000 crores. So overall, there was an outflow of 400 crores, wherein domestic institutions purchased in cash above 600 crores, which is 620 crores. So if you combine the index futures bought and sold by foreign institutions, the cash and stock futures bought and sold by foreign institutions, plus what was done by domestic institutions, so it gives you a positive figure to a neutral figure. Overall, it's like from institutional perspective, no major action has happened overall. And again, that's also relevant. That's also very much clear when we look at the volumes of yesterday. So it looks like it is a bear trap. People could be sticking into bear trap. People have gone very, very bearish. I'm not asking you to go bullish, but all I'm saying is be prepared for the action. Trading is just like a sniper game. You wait with your sniper unless and until you have the target right in front of you, and then you fire. So be prepared. I'll keep you posted during market hours. I had warned you before the fall started when markets were at the highest price, and when it was the time to buy, I'll let you know that as well. So looking at other stuff, we already have discussed the fund flow. US markets closed above 2% negative, 2.25 to be more precise. Plus currently US markets are, US futures are flat to negative. For 3 consecutive days in a row, this is the first time post 27th of May that Nifty has given a closing below 20 days moving average. So now 20 days moving average is going to act as a very, very important level before you initiate buying. So we'll discuss the Nifty chart later on. One thing important in yesterday's session, US markets volatility was over 11% at one point of time, but it closed only 2% positive. Indo-China situation has no clarity what is going to happen, but it's my personal view that there's nothing major going to happen. None of these countries are in situation to involve into a war. For India, we all know what's our economic status. Plus, when it comes to China, the entire world is against them. Japan, Italy, France, Russia not supporting them, United States against them. All the major economies of the globe are against China. They have got a sentimental negative approach from all the other counterparts on the entire globe. So in this situation, China cannot afford a war. Plus India is not in a situation to do that. So most probably this situation will be sorted out, and any fall that's happening, it should be a good time to accumulate some quality stocks. So I'll keep you posted on that as well. Now let's look at the Nifty chart separately. Nifty, as I said, closed below the 20 days moving average. As you can see, the red line. The volumes were below yesterday. So again, as I said, major selling had not happened. Looks like more or less the selling was done by the retail traders or maybe the loose hand. So there was no aggressive selling happening. So we could be headed towards making some kind of support. And if you look at the prices, what has happened is in last 3 days, market has tried to make a base. More or less last 3 sessions are in the same range. The lows of day before yesterday was not broken. The highs of 2 days back, that's Monday, was not, the Friday was not broken again. So let's see how the markets approach. Next support for Nifty is placed around 11,290 levels, followed by 11,140. First resistance is 11,400. That is where the 20 days moving average is placed. In case we get any strong a momentum above 11,400, we can think of initiating some buys. Till then, just wait and watch. MACD, RSI both are negative. Trader, this is the point of time when you as a trader and investor should make up your list of investments, the stocks that you would be looking at. My 2020 portfolio has given me returns of over 100% in the last 1 year with the method of 4 season, with the implementation of 4 seasons method. In case you want to know about the 4 seasons method or my 2020 portfolio, call me up, comment, or you can directly message me as well. Looking at Bank Nifty again, it's been almost 7 days. Markets has been precisely negative. 20 DMA has been broken on a closing basis. Now next support for Bank Nifty is most likely to be 22,411. That's the 50 days moving average. For any positive view, we will go positive anything above 23,200, but that to looking at the volumes and other data points. We would be positionally positive in case Bank Nifty goes above 23,400. Till then, we'll think a little bit towards the positiveness in case Bank Nifty goes above 23,200, and buyings would be initiated above 23,400. So this price range of 22,400 to 23,400 is kind of no trade zone for Bank Nifty. MACD on daily charts has turned negative. This is how you should be approaching the markets. As I said, Nifty is a kind of no trade zone. Anything below 11,400 is negative. 400 to 550 is a no trade zone. We'll think about any positivity above 11,550. Bank Nifty is positive again above 23,400. Till then, no trade zone. Again, it would be negative if it sustains below 22,700. So be very precautious in case markets open negative and stays negative. Metal index negative, as I had predicted yesterday. Metals looks weak, so avoid. Exactly same thing happened. IT index, I told you yesterday, ITs are looking best and bullish. So ITs did massively well. TCS made its all-time high. So whomsoever followed my advice made good money yesterday. Pharma index looks bearish, but it looks like it's reaching its support. Pharmas are fundamentally positive. So in case it doesn't break yesterday's lows, pharma index, that's 11,000 levels. In case it sustains above 11,000 levels, we can think of some bottom fishing, not aggressive buying, bottom fishing. Energy is neutral, avoid energy. As I had said yesterday, Reliance is something that looks a good buy, and it did well as well, because of which Nifty was more or less positive throughout the day, and it started falling in the second half. So, but again, as of now, I would advise not even to look at Reliance. Avoid the entire energy pack. This is the first time after many days energy index has given a closing below 20 days moving average. So maybe next round of negativity could come from Reliance or the energy stocks. Yesterday crude was massively down. At one point of time crude was 8% down, so that's not at all good for lots of energy companies, especially Reliance. Reliance covers 15% of the entire Nifty. So in case Reliance, which has got a major oil refinery company, in case their crude oil production, they get a margin hit on the crude oil front, it's not going to be positive for them. So overall, the entire energy sector would be in pressure. Yes, some oil marketing companies could be positive, like Indian Oil Corporation, BPCL, HPCL. But what happens is, in many of these companies, they are a mix of oil marketing plus crude oil production. So be precautious there as well. Auto index closed below 20 days moving average. Now, this is how you should proceed in auto index. As we already have a buying position in Maruti, which is already in over 7% of profit, hold the position, number one. Number two, auto index should not be looked at from index point of view, because there is a different pack of auto stocks. For example, Mahindra and Mahindra, majorly into agriculture, the tractors and all, plus consumer vehicles as well. So majorly those things which support the rural economy, like two-wheelers, like Bajaj Auto, Hero Motor Corporations, Maruti. These are the ones that could give you a good traction, some good positive momentum. Rest, others would not do very much well. It's more or less after the economy has opened, the rural economy especially, they are getting supported. Rather, to support the rural economy, we need some auto stocks to perform. We need sales to happen in terms of tractors and trucks, to have the mobility moving again. So that's how we should be approaching the auto stocks. Be stock specific in auto stocks, not index specific, I repeat. So I would not be sharing stocks names again for today's session, because currently, in my opinion, market is into a wait and watch mode. We can of course prepare our list for these stocks. Call me up, message me, DM me, comment me for knowing my special 2020 portfolio and the method of 4 seasons. So that would be all in today's session. Thank you so much for watching and listening. Catch you up in the market hours. I'll keep you posted during any changes about anything happening in the market. Rest. Thank you for listening. Stay healthy, stay wealthy. Abhishek Raj signing off.